Right. Welcome to yet another session of Advanced Management Accounting. My names are Mr. Mariga, and this is Manifested Publishers. I want to talk about investigation models for what? Variances, which is still a topic under budgetary control what? Techniques. In the previous session, we talked about ex post or planning and operational variances. So today we want to do what? To talk about the various models that you can use to investigate our what? Variances. When you are investing your variances, there are certain factors you need to consider. One of the factors you consider is the size of the variance. The size of the variance. How big is it? Okay. Number two, you also want to consider the type of the standard that has been set. What is the type of standard that has been set? The third factor that will guide you as far as investigating variances is concerned is the cost that you're going to incur were you to investigate that what? Variance. The cost of investigation of the variance. Number four is the likelihood of repetition. How likely is it that the variance will repeat itself in future? So if you see that there is a likelihood that it will repeat itself in future, it is important to investigate that particular what? Variance. And lastly, you want to consider the ability of the measurement tool. How effective is it in investigating the variance? That tool that you are going to use, how effective is it? Your investigation models or tools are four. Number one, you have a rule of thumb. Number or sometimes also known as materiality. This is also known as what? Materiality model. Now this investigation model here, the investigator will basically decide on the limit that they are going to consider as material. Then after that, investigate. Okay, so you need to consider the limit and whether that limit is material. If it is material or it can influence the decision maker, you need to do what? To investigate. If not, do not do what? Investigate. Number two is statistical significant model. Significant model. No. The statistical significant model is normally used or is a model of investigation of variances where you measure the what? The variance, or you measure probability given the variance and the mean. So here you measure probability given the variance and the mean. Okay. It is such that it is a rule set on standard deviation that is allowed away from the mean. So effectively, the statistical significant model is an investigation model where you use your normal distribution. You use your normal what? Distribution. And remember, your normal distribution is a looks like that, is a model, is a probability distribution where it is correctly defined if you have the mean and you have the standard deviation. So this model here, known as statistical significant model, you simply use your normal distribution curve to investigate what? Variances. The third model is statistical quality control model. Statistical quality control model. The statistical quality control model, now it is a model where you will test variances if they do not fall within a certain tolerable limit, or if they do not fall within a certain tolerable what? Limit. For example, you may have your mean there, your mean limit, or just your mean, that is your upper control limit, and this is the lower control limit, your lower control what? Limit, such that if your variance falls between the upper and the lower, you do not do what? Do not investigate. Do not investigate the what? The variance. However, if the variance or your result falls below the lower control limit, there you must investigate. And upper control limit, you must also do what? Investigate. You must investigate. Okay, so you investigate. Why? Above the upper and the lower, because they are outside the tolerable what? Limit. They are outside the tolerable limit. Then the fourth model of investigating variances is what we refer to as statistical decision model. Statistical decision model, where it is a technique of comparing the expected cost of investigation and the expected benefits of investigation. When the benefits exceed the cost of investigation, you will investigate the variance. However, if the benefit is lower than the cost, you will not investigate the what? The variance. You're not going to investigate the what? The variance. You're not going to investigate the variance. So here, sometimes or in most cases, we simply use decision trees. Decision trees, where you're even going to have your states of what? Nature. Is investigate, don't investigate. Then various states of nature when you investigate, and the various states of nature when you don't do what? Investigate. Then whichever is the best, if the benefits outweigh the what? The cost of investigating, what will you do? You will simply do what? Investigate. So those are the various models that are used when investigating what? Variances. Number one, rule of thumb, we will look at the materiality, use of a normal distribution, Then you set acceptable limits so that if they fall above and below, you investigate. Then statistical decision models, where you look at the benefits that will accrue from investigating and the costs that will be incurred when investigating. So when the benefit exceed the cost, you investigate. If not, do not do what? Investigate. All right. Now in the next session, we will talk about the various budgetary control systems, the various budgetary control systems that can be used by a decision maker or by a company when preparing budgets, So goodbye and see you next time.